Welcome to the last webinar of this technical analysis series. This one would be about advanced candlesticks, which is also called Ichimoku system. Hopefully by now you guys have learned some basics on candlesticks and technical analysis, and hopefully you guys are getting more interested in seeing that side of the market. I know you have been exposed to the fundamental analysis quite a lot. The technical analysis is not taught in schools and universities, which is very unfortunate. Hopefully, you will be interested in the technical side of things and continue to learn in that direction. Feel free to contact me at my website, profitablecandlestickcharting.com, and we do offer more advanced courses which are geared for traders. Again, this is an introductory course. I have to mention that, and I know you have also received an email from Mentored Research saying so. Definitely don't want to be trading in the markets with what you have learned in this seminar. This is an introduction seminar. There's quite a lot more to learn, especially the nuances of how to apply all these things that you just learned. So, but this should get you going in the right direction. All right, having said that, let me share my screen. I have a small presentation for today, and if you have questions, please reserve them till the end, and we will answer those questions at the end. Okay, so I'm going to share my screen. Okay, hopefully you guys see this screen now. You should be seeing technical analysis webinar 3 on your screen. All right, again, please keep in mind this is an introductory educational course. Nothing in here is geared towards giving you any indication of buying or selling stocks immediately. It is to get you on the right path. All right. I always show any books, any relevant books that you might look at, and here's one. Here's Ichimoku charts by Nicole Elliott. You can purchase this in India. I think Vision Books has acquired the rights to publish this in India. So you should be able to get this. This is more geared towards currencies. However, I do have a book coming out in September, which is being published by Vision Books. So hopefully you guys will buy a copy and get some good points out of it. It covers a lot of stuff on Ichimoku, and it is based solely on the Indian markets, Indian stock market. So plenty of examples of Indian stocks in there. So hopefully you like it. So look for it in September, hopefully, if not October. All right, since Ichimoku is a little bit confusing, a little bit different from other indicators, because it has 5 inbuilt indicators. We'll go through it a little bit right now, just to make sure that things are very clear. Okay, so I'm going to go through each component here very fast, since you already have that covered in the course. And then if you have questions, feel free to type it in the chat, and I will look at it after my presentation is over, since I can't look at the chat while I'm doing the presentation, since this is full screen sharing. All right, so the first Ichimoku system is comprised of 5 components: the Tenkan, Kijun, Shikao, Senikao A, and Senikao B. All right, the Tenkan. Okay, here's a chart showing Ichimoku. This is APL Limited. Bullish chart here. So let's look at each component, and let me start the pointer. All right. So the first component is the Tenkan, which is this blue line. And some of you who have completed the assignment have answered the question wrong about Tenkan being a 9-day exponential moving average. It is not. Tenkan is the moving average of the highest high and the lowest low of the last 9 days. Okay, so essentially what you do is you are at this point today, right here. You take 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, and you look at the lowest low and the highest high of these 9 days, and you average them, and that's how you get today's point. Okay, it has nothing to do with an exponential moving average. According to the Japanese, the halfway point of bullish candles holds a lot of importance. That's where resistance is. They give a lot of meaning to half, okay, to the average of highs and lows. So that is also where this comes from. That is surprising that even Ichimoku has come out of Japan from which has given us the candlesticks. So excuse me for the phone. All right, so that's what the Tenkan is. So as you can see, you can anticipate when the Tenkan can move. This is one point that most traders don't get, is you can actually anticipate when the Tenkan is going to come up, because you regard the Tenkan as support and resistance. So you want to know how close the support is to where your stock is. For example, in this chart, let me clear that. Example, in this chart, there's quite a lot of difference between where the stock price is, which is right here, and where the Tenkan is. Okay, so that's a big gap. So that much is your resistance. Okay, hold on one second. I just got to know that the slide is not showing up. That is strange. Okay, hold on. All right, let's see. I'm going to hold on once again. Now, do you see the slides? Let me go back to Google Hangout chat. Sorry for the technical glitch here. Hopefully, if anybody is there, could you write in the chat if you can see the slide now? All right, I'm going to assume that this is showing live now. I'm going to keep it not full screen, but just show it this way. So, all right. So where was I? Hold on. Okay, I'm going to do this one more time. Sorry for the glitch here, but let's try this one more time. Screen share. Okay, I'm going to assume that you're seeing the slides now. All right, so if not, you always have this recorded presentation, so hopefully, and then if you have any questions, feel free to type in the chat room, in the chat box on the side. Okay, we were back at this chart. Okay, so in this system, so the Tenkan is what is going to give you the initial support for the stock. So if the distance between the Tenkan and where the stock is big, then you have a chance that the stock might pull back all the way down to the Tenkan. So you always want to know how fast is that Tenkan going to move. So since you know the formula for Tenkan now, which is just the average of the highest high and the low, looking at this chart here, I can say that the Tenkan is going to jump up quite a bit, because the next day, the lowest low is going to jump from back down here to up to these lows of these doji candles right here. So if that is the case, then I know this Tenkan is going to move up, and so I'm going to move my stop, which is a very important criteria for trading. Where are you going to place that stop? So I'm going to move that stop with the Tenkan if that is my strategy. Okay, so you always, knowing that formula for Tenkan, you can anticipate when that support is going to move up. Now, same thing goes for the Kijun. Let me check back, see if anybody has written anything in the chat. Okay, good. Now I'm getting indication that I can see the slides. All right. Okay, so going to the Kijun, which is now the moving average of the highest high and the lowest low of the last 26 days. Okay, that is considered a more primary support than the Tenkan. And again, if you know the formula, you know when the Tenkan is going to move up. So usually I won't have the stop for any position below the Tenkan. Mine's usually below the Kijun because that is a primary support level. So knowing that you can move your support and you can anticipate moving that support. Even initially, you know that when you enter a position, how far that support is from where you are entering the position. So it gives you that should give you the strategy to accommodate how many shares you can buy, how much capital you need to invest in the market, because you know your stop loss at that point. So those are the two main moving averages in the Ichimoku system. Okay. Now here comes a little confusing part, which is the Shikao. People get a little more confused on the Shikao because even though it's the simplest component of the system, it is just the price. It is just today's price shifted back 26 days. Okay. Just today's price shifted 26 days back. So as you can see, this is price right here. It goes back right there. So the reason this is done is the inventor of the system, Goichi, he found out that these prices present resistance 26 the candles from 26 days back. Okay, so these guys, they present resistance they present future resistance to the stock. So if there has been a lot of trading going on here, a lot of shares trading hands here, then that is going to present resistance in the future for the stock. So if today's price is shifted back and it's going to hit these candles, then you know there is a resistance. Okay, if today's price is well above these candles from 26 days ago, then you know that there is no resistance. And that's why this is called the momentum indicator in this system. Okay, that tells you how strong or how weak the momentum is for a stock. For example, at this point right here, the momentum is pretty weak because you know that price is going to bump into these candles, and these candles will present resistance to that stock. So the momentum itself is weak. Okay, and here you can see that there is absolutely no resistance for the stock. The stock is free to make new highs. There's not a lot of people who are sitting on losses at this point. So there's not a lot of supply which is going to be dumped into the market. So that's why the momentum here is very strong. That is, in fact, one of the best strategies out there is the Shikao breakout strategy. I think that is included in the course. So that is one of my favorite strategies to buy the stock when the Shikao breaks out from these candles. Of course, you need to look at other things too, but that is the primary strategy. So again, this is one of the simplest indicators within the system is price moving back 26 days. Okay. Now, the fourth component is your Senekau A, which is the stop line. But this, by the way, the green structure that you see here is the Kumo, which is the heart of the Ichimoku system, and that is comprised of the Senekau A and the Senekau B. The Senekau B is the bottom of the structure, the red line that you see, or the purple line, and the top line of that structure is your Senekau A. Now these Senekau A and B will be reversed. If it is a bearish cloud, you'll see usually it is painted as red. So in that case, the Senekau B will be on top and Senekau A will be at the bottom. Okay. Since we are looking at a bullish chart, this is a green cloud, the green Kumo, and you have Senekau A on the top and Senekau B on the bottom. So how Senekau A calculated? It is the average of the Tenkan and the Kijun. Okay. So today, for plotting today's point, you take the Tenkan, you take the Kijun, you divide that by 2. As simple as that. Okay. Divide that by 2. And the only thing is, instead of plotting it on today's date, you plot it 26 days in the future. Okay. Simple. In the Shikao, you went back 26 days, and in the span A, Senekau A, which is also called span A, and Senekau B, which is also called span B, you just project it 26 days in the future. Okay. So this point is the average of this Tenkan and this Kijun right here for today's day, assuming this is today. All right. And same scenario with Senekau B. Senekau B is the average of the highest high and the lowest low of the last 52 days, or 52 periods, I should say. Now this is a daily chart, so the period is the day, but if you're looking at a 5-minute chart, then the period is 5-minute candle. So if depending on what chart you're looking, the period will be defined by that chart. So Senekau B is the highest high and the averaged with the lowest low of that 52 periods, and you project it forward 26 days in the future. Okay, now that tells you, so you're basically projecting forward your support and resistance. Okay, this Kumo acts as solid support for the system in a bullish chart. Okay, it will act as solid resistance for a downtrending bearish stock. So today it is telling me that the future support is around this 247, 254 level on this chart. Okay, so it helps me plan by looking in the future. This is the only indicator which allows you to do that. Okay, so so you can design basically option strategies if you know this information. This is very crucial information as to how that support is going to behave all the way in front in 26 days. So if you're playing options, you can design some strategies around that information. A very, very powerful stuff. Okay. Now options and derivatives is an entirely new field. I would advise young people like you to start learning about derivatives too, because they are extremely powerful. They are leveraged, but they are extremely powerful. So that might be some more avenue for you to explore. All right. So at this time, these are the 5 components of the Ichimoku which make up the system. Okay. So Tenkan, Kijun, Shikao, the span A and the span B together form this entire system. You cannot look at each component on its own. You have to look at all these 5 components together to give you the complete picture. You have to use your knowledge of candlesticks anyway. Okay, so to increase probabilities, you look at what the candlesticks are, okay, along with this system. Now, whenever I trade, I have the Ichimoku system, and I have the 200-day moving average and the 50-day moving average, because those two are the most commonly used major moving averages. So I do have the 50 and the 200 simple moving averages on the chart and the Ichimoku system. Okay, that makes my complete trading charting system. Okay, next slide here is we are going to quickly go over. I know you guys have the Shikao breakout strategy in the course. This is going to just go quickly into the Kumo break strategy, one more strategy. And the basic strategy is you initiate long positions. That means you buy when the price breaks and closes above the Kumo, because the Kumo is support. Now, if the price is closing above support, you start buying because you now know where your stop loss is going to be. Similarly, on the short side, you initiate short positions when the price breaks and closes below the Kumo. Okay. Now, just like the Shikao breakout strategy, there are a few key questions you ask yourself during a Kumo break strategy. And they are, has the price closed above the Kumo, which obviously will be the case because you are looking at a Kumo break strategy. So the first criteria is the price should close above the Kumo. All right. The second criteria you need to ask is the Tenkan above the Kijun. Remember, and this is for a bullish Kumo break. Okay. If you have to reverse these things for the bearish Kumo strategy. This is the bullish Kumo strategy. So has the price closed above the Kumo in the bullish case? In the bearish case, it will be has the price closed below the Kumo. Second thing is the Tenkan above the Kijun, because that tells you that the slower moving average. Keep in mind the Tenkan is the average of the highest high and the lowest low of the last 9 days. So Tenkan being above the Kijun tells you that the faster moving average is above the longer term moving average, which tells you that the recent trend is higher. Okay, that's what that tells you, the thinking about the Kijun. And the third thing you ask is the future cloud bullish? Okay, you have already seen this future, not that one. Okay, this is the future cloud. Okay, that needs to be bullish for this strategy, because that tells you that, okay, you have support for the stock in the future. And the most important thing again is the Shikao. Is the Shikao above price 26 days ago, which tells you that you have clear momentum on the stock. Otherwise, your stock is going to face resistance if the Shikao is below the price from 26 days ago. Okay, so let's look at this chart here. There are two Kumo break strategies on this one. First is this guy back here, which is a bullish strategy, and the second one is a bearish strategy, the Kumo breaks. Okay, so let's look at the first Kumo break strategy here. Here's where on this big candle, that's where the Kumo, that's where your, sorry for the phone again, that's where your candle broke above the Kumo. Okay, then you have, what I usually like to do is see confirmation. Okay, I want to see that it has the next day's candle, the bulls are still in there, and this candle needs to get above the high of the trigger candle. Okay, so that tells you, also notice if you go 26 days in the past, that's where the Shikao breaks out. Okay, so the Shikao has broken out, the future cloud is bullish, this stock has closed above the Kumo, the Kijun, the Tenkan is above the Kijun. It's a little difficult to see that, but that is the case. And that should give you all clear conditions for a buy scenario. Okay, so you buy there and then you enjoy the ride. All right, the second case here is the bearish Kumo strategy. Here's where it broke down below the cloud. Okay, the Tenkan was still not below the Kijun, so you wait for the Tenkan to be below the Kijun. By that time, the stock had already come up, tested the resistance of the cloud. Okay, as I told you, the Senekau B and the Senekau A, they will provide strong support and resistance depending on the direction of approach of the stock. So in this case, the Senekau B was providing resistance to the stock. Okay, so then it failed that resistance and came down. By that time, the future cloud had turned bearish, which is what you want to see in a bearish Kumo strategy. So the future cloud turns bearish, and Shikao is below the candles from 26 days ago, which is right here. This point here corresponds to this point, so it is below the cloud, below the candles from 26 days ago, which is what you want to see. So all conditions are set here. This Kijun is the Tenkan is below the Kijun at this point. Future cloud is bearish. Stock closing below the Kumo. Shikao free and clear. That giving you good momentum. So at this point, you're free to initiate a short trade, okay, or buy some put options on this. So and then enjoy the ride. Okay, let's see. I have one more chart to show here. Here's Aptec. Here's where actually the stock closes below the Kumo, but again, or actually back here, the stock closes below the Kumo the first time. Now, why would you not initiate a short position back here? Okay, plenty of, well, not plenty of reasons, but one of the main reasons you're not going to initiate a short position here is because if you go back, the Kijun is or the Shikao is above these candles. Okay, when the Shikao is above these candles, there's always a chance that price will find support at this price level. Okay, so you don't want to initiate your short position there. Then the stock goes back up, fails again at this resistance level, and closes back down below the Kumo. Again, why would you not initiate the short position here? Because your Shikao is still above the candles. It's facing these candle support. You don't want to initiate that. Okay. Same scenario here. It's still doing the same thing. The Shikao is still not free. Here is the fourth time it closes below the Kumo. And at this point, right around this area right here, you have the Shikao is clear. It's below the candles from 26 days ago. The future cloud has now turned bearish. Tenkan is already below the Kijun from back here, so that is not an issue. But all this condition and the Shikao conditions are satisfied at this point. Okay, at that point, you're free to go ahead and initiate a short position. So you have to keep those. You have to keep perspective of all these 4-5 components. Okay, you can't look at them in isolation, especially the Shikao. Many traders ignore the Shikao, but that is one of the key to being successful using an Ichimoku strategy. Okay, always have a look at that. And let's see, the last one again is the stop loss setting. Stop loss is I think we went over this again in our last webinar too, in regards to the candlestick signals and the candlestick patterns. Same scenario here with Ichimoku. Okay, look at this chart here. When you initiate your position, your short position at this point, you have to define where is the point where you are going to set your stop loss. Okay, you already know that the Tenkan, if you sell here, the Tenkan, the Kijun, and the top of this Kumo, they are all resistance areas, which should help you. Okay, if I enter this position, I would tend to keep my stop above the Kumo because that is the most solid resistance given these 3 components. Okay, the Kumo is a very strong support or resistance. In this case, resistance. So I would keep my stop above the Kumo so that if the stock comes all the way back here and triggers my stop loss, I need to get out of the position. Then my reasoning for getting in this position is void at that point. Okay, I don't want to be in that stock anymore. So always have that stop loss in your mind, and then as the stock moves down, you are obviously going to move that stop position along with the Tenkan and the Kijun. Okay, obviously I'm not going to keep, if the stock is down here and the Kumo is up here, I'm not going to keep the stop up here. Okay, that's too far above the stock and too much profits to let go of. So at that point, I move it with the Kijun, okay, because that is the primary support compared to the Tenkan. So as the Kijun moves down, I keep moving the stop down. I do take profits along the way. Okay, it is always a good idea to take profits as they accumulate, and the last position you have on should be stopped out as it goes up through the Kijun. Okay, that is how most traders do it. You don't want to expose your entire profit to a gap up in the stock. As the stock moves down, you keep taking profits, but your last maybe third of a position or a fourth of a position, you keep it and let it get stopped out as it trades above the Kijun, because you never know how far below the stock is going to drop. So that's why you always let that last position keep riding. Okay. So that is all I have on the stop. Again, if there are any questions, let me go back here. If not, you guys are always free to send in your questions directly to me, or you could always go to my website, profitablecandlestickcharting.com, and type in your questions there. Or you could send it to Mentor Research to the email address there. Again, it's been a pleasure teaching you all this course. Hopefully, I've learned quite a lot of things on candlesticks and Ichimoku, and you will find this journey interesting in the technical analysis. So that will be it.